Alright, guys, how are we doing? So, yes, now I'm speaking. How's everybody doing? Good. Okay, so this webinar is a little bit less formal than typical. Basically, what I noticed almost 100 people registered, and there's only 20 of us here, so I guess everybody's waiting for the recording. No big deal. So what I wanted to do today is, I thought that I'd basically throw it out to the floor, and we could talk about what we expect moving forward just from a technical standpoint. Maybe not intraday stuff, but just trying to project this out and trying to think about where we are in the world moving forward, and what we can expect from currencies. Now, everybody's got an opinion, and if if you put 3 traders in a room, you'd get 5 different opinions. You know the deal. All right, but I don't know about you, but just trying to figure out the dollar of late has been a little bit of a challenge. Would you agree with that? If you've been on top of it, then I tip my hat. Okay, so yesterday we got a little bit of fundamental news, but I don't think it was earth-shattering. Just more money printing, and there's various ways to look at that. But what do you guys? So let's do this. You tell me what you would like to look at first, and please don't. Let's not do pairs. We're probably going to have time for about 3 pairs here, but let's not do like Hong Kong dollar versus Botswana and Pula, if you don't mind. You know, if we're going to look at an exotic, let's look at like a Euro Kiwi, a Euro CAD, something with a bit of interest rate differential to it, and let's keep it, first world countries. Oh, Boyke. Sure, we can look at. Okay, I'll look at the dollar. Okay, let's look at the South African rand, but I'm going to do it extremely quickly because I do consider it a major exotic, and I think there's about 2 people trading it in the world. And then let's look at something like the Euro Yen, shall we? All right. So I think the first thing one has to appreciate about the rand is just the slowing South African economy. Just every day one logs in, yeah, we'll look at Euro Yen in a minute, because I think I have some contrasting views on the Euro Yen to what a lot of stuff I've been reading from various analysts. But the way I see this, Boyke, is it looks like an uptrend to me, and it's going to continue so. Unfortunately, the data's a little bit skewed on this. But you got yourself a little double top, so I would look for a little bit of sort of something like this. Push back down into sort of this 835 area, and then head back to about 905. I don't, like I said, I prefer not to spend a ton of time on this, just because I'm not sure a lot of people are looking at it. But it's an uptrend. We keep getting deflationary stuff coming out of South Africa. I mean, just today we had very poor auto sales news. And I'm not a big news guy, but it's a cumulative effect of it that matters, right? You start to add into it. Oh, they missed on CPI. Oh, they missed on manufacturing. Oh, they missed on auto sales. Oh, you just keep missing and missing and missing and missing. You throw all that in a bucket, and eventually you get rate cuts. And it's monetary policy that moves currencies, right? Anybody else can tell you anything in the world, monetary policy moves Forex. Anticipation of different yield, anticipation of where interest rates are going to be is what moves currencies. That's it. All right, so as far as this as far as the rand, here's a daily. I think we could expect a little something like this, sort of a little second move down, and then we pick up all of this stuff and partake of a higher high, maybe to 920 on the dollar rand. Okay, so let's talk. Yeah, no worries. I've been watching it. My sister just recently had a baby, so I'd like to go meet the nephew at some point. So I've been keeping a little bit of an eyeball on it. Okay, so let's talk euro yen. This is a little trade we did today, just the short side. It seems like shorting this was like running and playing in traffic. All right, worked out fine in the end. Okay, so the one thing. All right, so this yen. Let me get rid of this. I have to redraw it at some point, but I think it's fair to say. I think it's fair to say on this. I think it's fair to say on this euro yen that going to the weekly that we've probably put in a bottom. Would you agree with that? Right, for a while at least, I would think. Now, the big question I have for you is, would we consider this an uptrend when we think about this on a weekly basis? We consider, forget the last 2 weeks. Okay, yes, it's been uptrending, but would we consider this an established uptrend for the euro yen? I think we'd probably have to say not so much. Right? Just find a little something here. I was just looking for a correlation chart that Kurt published, but okay, there it is. Alright, so you didn't do the stock market, which is a little bit disappointing, but anyway. Alright. So if you're gonna reverse a trend over the long haul, I don't understand 100 people are registered and there's only 35 of us here. I'm assuming that everybody just kind of waits for the video. Anyway. Alright, so morning Kevin. Right, so how does one reverse major trends? Okay, it's very seldom that you're going to go, you'll do this on a 15-minute chart, surely. Right? You'll do this on a 15-minute chart that you do this sort of thing. Thanks. You'll do the V top and the V bottom on a 15-minute. But on a weekly basis, almost never. In fact, never. Yes, never. Alright? To reverse a major daily / weekly trend, you generally have to do the old down, very bearish, very neutral, and then you get the little, hello everybody, and up she goes. Alright? And this little whip-de-doo on the downside, oh, I see. Thanks, Don. So this little whip-de-doo here is typically, I don't know how to explain this. We call this the kick you in the teeth setup at FX Bootcamp, right? Because if you have something like this going on, price continues down, and then you get this little continuation flag, basically at support, price will generally do sort of something like this, right? Catch everybody out. Oh, look, it's breaking to the downside. No, it's not, and up it goes. All right. So what I'm trying to say is, I think that this euro yen is in this phase. I think it's in this neutral phase. Alright? And fundamentally, sorry to break it to you, but the euro is still rubbish. Okay, the euro is still kind of crummy, guys. Believe it or not. It's just that the USD happens to be crummier of the last little while, which is saying something, because it's not easy to compete with the euro in terms of rubbishness. It's a pretty tough crowd, that, right? No, I think the ZAR is worse because it's got further to fall. Yeah, no, it's actually not such a silly question, because if it's all about yield. That's all that really matters. And if you've been up there at 5, 6, 7%, you've got further to collapse to come back to zero. Therefore, you're going to fall faster relative to those that are already there. Right? So anyway, so what I was getting at is that on the euro-yen, yeah, we're kind of very bearish, and now we've gone into a more neutral phase, and now kind of bullish, right? And I know some people like to look at this sort of thing, and I do the same. All right? A little envelope, right? And this is nothing more than moving averages, 5 to 10 EMAs apart. 5, 10, 15, 25, 5 to 10 deviations apart, all the way from 5 to 100, right? It looks all pretty colors, but the bottom line is that when they're all established on top of each other in one direction, price is generally trending, and then when they break and cross below each other and then retest, they're generally trending in the other direction. All right, that's the raw sort of thinking behind it. And the only reason why I pull this up is because it's a good visualization for what's going on. All right. Now, on this, we have still got, for the most part, yes, we're crossing through each other now, but for the most, and moving averages are tremendously lagging, but I think that there's a lagging benefit in this exercise, because the trend is the trend until it's not the trend. And when you have such nice lagging moving average, lagging indicator like this, the trend really has to establish itself and prove itself for things to change on the indicator itself. All right. Now, I'm not using this as a trading. I'm not using this as a trading instrument. It's simply a visual representation of prevailing trend. All right. I like price action changes of trend, but this is a nice way to look at it anyway. All right. And what do we notice with this? Is that the medium to longer term moving averages are still categorically pointed to the downside. It is, however, the first time that we've really prices broken definitively above the envelope. It threatened to do so here, but now it has. Right? We've closed candles above there. However, it's very obvious to me that we are in this neutral phase. And neutral phases are trends. You'll get small retracements, large extensions. However, neutral phases is characterized by large gyrations of very little. Okay? And I think, it's my 2 pips, that we are in large gyrations of very little here. So you're going to get more of this sort of thing. You're going to have brilliant sort of 3-week trends followed by a big fat kick you in the teeth reversal. Okay? And I think that we're probably just about due for one of those. Alright? I think that we'll probably try and push up next week, somewhere into sort of this 113 zone. Let's go back to this chart, which makes a lot more sense to the average human being. Alright? And there's no question that we had a ton of resistance here around sort of 111, 112. It's a weekly area. Whenever you're looking at a weekly resistance point, you figure literally that this is about a 300 pip area. Seriously. Right? Because it's, when you look at more intraday stuff, it's a more solid spot. It's more specific. When you look at weekly areas like this, you talk about a spongy zone, right? Price could go all the way into here, and then all the way back down there, and you're going to look back on this and say, oh, look. Oh, cool, look, we held this area. Meantime, you looked at it as 112, and it printed 116. But on a weekly basis, it's still ultimately going to hold it, right? Make sense? Okay, so I'm still of the opinion that this euro yen is probably going to do a little something like this. I think it will print a higher high, but ultimately then will head, down to about $100. And then we'll see what it wants to do after that. Because there's a lot of things affecting the yen. Obviously, the yen itself is the principal, right? You guys know this trick. Okay, if you take this to parties and you show your friends, you will impress them, I guarantee you. Okay? If you take the price of the euro dollar right now, which is 1.3082, alright, and multiply that by the price of the USD yen, which is 83.53, you just so happen to get the price of the euro yen, give or take spread and deviation from the time you did the calculation. Alright, so what is this proving to us? Is that the yen is actually a figment of your imagination. The euro yen. It actually doesn't exist. Right? All that's happened is that your broker has been kind enough to combine them. The USD yen and the euro dollar. Alright? Which is pretty amazing because the euro yen by itself respects technical levels. So how does that work? If it's simply a derivative of the USD yen and the euro dollar, how does it respect technical levels? Still working that out myself. Get back to you on that one. Okay? Anyway. So the point being is this. How bullish are you on the euro? On a scale of 1 to massively bullish, where are you? Right. So you've got to remember that the trouble with currencies, the trouble with Forex, the trouble with Forex right now is that you have to trade it relative to something. And I'm saying that tongue-in-cheek, obviously. But it's like, what is less rubbish? Okay? So, I'm talking though over like the next 3 to 4 months. Right? Do we expect the euro to print 35? I mean, maybe, but I doubt it. Do we expect the yen to be parabolic to the upside? What I'm trying to get at is this a trend that is likely to do this? Yeah, it's possible, but I think it's very unlikely. What I'm thinking more is, look, we've got a lot to prove to the world, and we'd like to do is a little something like this. Then establish a bottom, and then maybe try a little something like that. Okay, so this is what I'm anticipating out of the euro yen. I think, yes, that this little trend will continue up fairly unimpeded to about 114. And at that point, I think that you, in all likelihood, are going to try and make a fib of this rise, at least to pick up this stuff here. Boom, 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 and into that area. Yeah, so you could see it as a head and shoulders, sure. Cat pips. It's a little something like this, I guess. Sure, I can dig. You'll almost have a little mini head and shoulders within the right shoulder. Yeah, so that's what I'm anticipating. And this is based on the logic of a couple of things. One, like I said to you, trends don't just reverse V-bottom. It generally will base out, they'll have a neutral phase, then you'll start the bullish trend. Yeah, it's peaking above 130. I had it going to 31.45 today. I think that's Maud. Yeah, no, I'm fine. I think Maud's on the computer over there. Alright, thanks. Naughty, naughty. Alright. So, dissenting voices, ready, steady, go. Any differences of opinion on this matter? On this Euro-yen situation? Also the other thing to think about is simply the carry trade, so to speak, is really based on yield differential. And there may not be rate cuts in Europe for the next meeting, but I would be very surprised to not see them in like January, February of 2013, assuming that that the world is still around, right? Have you guys worked out what you're wearing yet for the world ending? So, no dissenting voices, no differences of opinion. Yeah, it was a lame joke. It was a lame joke caught by few. Thank you. Alright. So that's Euro-yen, and that's based on my passionate dislike for the euro. I think that the USD yen is going to be overdone. And I think that we're likely to chase this thing back to about $100 because I think too many people have got into this trade and they need to be shaken out of it. No, certainly, and like I said, I think that this Euro-yen has put in a low. I don't think that we're going to see 92. I don't think it's done on the downside. I do. And in terms of just trend definition, this is a newly defined uptrend. It is. And I am expecting it to do this. And push up here to like 125. Yes. But I think the first major move will be this, which is the better part of 1,000 pip drop. Followed by a 2,000 pip rise. And this is going to be predominantly yen, I would feel. I don't know Wayne's opinion. I don't really correspond with Wayne too much, to be honest. I work London, he works he's up around in New York. We're just on different sides of the clock. Okay, so that's my very humble opinion on the euro-yen. Alright, and at the same token, if you look at the yen itself, it's a very sort of similar yeah, we'll look at the euro too, happy to. And if you look at this yen itself, which is obviously a massive piece of the puzzle, we've broken above this line, but the same sort of thing applies here, right? This is a massive higher low, but definitely a neutral phase. Right? You can see bearish, bearish, bearish. Now we've developed into a neutral phase. We've crossed the 2155 moving average, which is a big deal. But typically when you cross those two, you're going to want to come back and retest them. So the same sort of thing here. I'm looking for us to do a little something like this. Hi everybody, base out, up she goes. So I think we'll probably print 85, head down to 80 cents, try to make a lower high, even marginally make a lower low, lower low, and then up she goes. The other thing to think about, although correlations are not what they used to be, I will concede. Alright, and there's enough free money going around to sink a battleship. I'm finding it very difficult to be massively bullish on this S&P where it is. In fact, you can see my little red line there. Right, this was, if you're looking at this going back to when the initial crash happened, we had this little complex head and shoulders. I'm sorry, you had this little head and shoulder. Check that. We had this complex head and shoulders that looked like this. Okay? And this was sort of the little right shoulder and neckline there. And then you also had this little head and shoulder within the top of it here. And this was the neckline of that. And that's precisely where price is. Alright, now the conundrum here is simply when you have a government printing $85 billion a month and getting in the hands of banks, that don't have to lend it to anybody, they can just shove it right into equities. It can distort what's real. Alright, but I still anticipate us topping out here and make it, it'll grind down to about 1300 on the S&P 500, which isn't a massively ambitious call, but I do think that we're going to want to sort of take a peek at these mid 12s here. Well, yeah, especially when you're dealing with large areas, but I think that I would prefer to anticipate, react, as opposed to just react. I like to predict the future, and then when it conforms to my prediction, then I feel better about it. Then I have more confidence in what I'm seeing. As opposed to just react to it, then I don't know what's real and what's not, what makes sense, and I'll want to, as opposed to try to predict it, jettison the rest, stick with the stuff that makes sense. Plus, all we're doing, right, all this is support and resistance relative to trend. Right, but it's still money creation, though. I mean, it's still artificial wealth creation. Boyke, I've seen it enough to get. I mean, yes, Boyke, actually, I've seen it enough to be able to predict the future with reasonable accuracy, yes. Or at least anticipate it. Right? I think that you can be wildly successful at 40% accuracy. So, anyway, if it blazes right through this level and goes and makes a higher high, okay, well, I'm not going to challenge it on the downside with this in my face. I need it to come down up here, top out, make a lower high, and then it's worthy of a short. It's not shortable right now. So there's analysis. What are the major components to trading? We're not going to get into this discussion, but what are the major components to trading? Analysis, execution, psychology. Alright, so analysis is simply what you anticipate happening. Then your execution should filter out a large portion of your errors in analysis. And then obviously your psychologies and money managements are different things. Right. But even the credit's not backed by anything, though. Well, if you have 2 or 3 to 1 risk reward on everything, and then you add to your winners, you're going to be okay. people tend to do is they tend to lighten up on their winners when they start to win, as opposed to pile into them. When you find your winner, you need to just jump on that sucker. What happens is that people come off their winners. Oh, I'll take some here, and I'll take a little here. Maybe I'll take a... No. Way to make money in Forex is when you find your winner, add. In my opinion. Correct. Something like that. Yeah, just, obviously it depends on, well, actually my last webinar wasn't exactly this, Money Magnet, so there's about a 45-minute video explaining exactly how I do that. So I'd encourage you to go along to, go check it out. You might find it helpful, you might not, and obviously you've got to have a fair idea as to where you're going. Anyway, the reason why I brought up that S&P chart was simply that I think we around resistance on the S&P, which is going to have an effect on the yen. All right, the correlation isn't that brilliant, but it's still another component to thinking that, hey, it may not all be roses on the upside here. And the other reason why I think it may not be roses on the upside here is simply that I'm seeing every analyst under the sun calling for infinity on the yens. I don't know. I'm not involved with it. Okay. And anytime I see a million people talking about one trade, I know that it's probably not the best trade in the world. It's no disrespect, but you know what I mean. Okay, so let's talk euro dollar. And I'll be perfectly honest with you guys. I've had a tough time. I've had a difficult time in the market the last 2 weeks. More than I've had in the last 2 years. I think I've been wrong a lot. Just been wrong more than usual. No, I've got no means been crushed. I just haven't made as much as I want, and I've had a little bit of spinning of the wheels. But these things happen. You can't always run hot. Yes, Wayne. Yeah. All right. Okay, so let's talk euro. The euro dollar is yeah, let me show you this graphic too, if I may. Okay, and in the last few days have actually helped the last few days, that's why I've been trading a lot of Euro Kiwi, Euro CAD, other denominations, because I'm not a big fan of rubbish versus rubbish. Not such a big fan. Plus, what is considered a pro exactly? I always love this stuff. I always love these terms, big money and pros. They're people like you and I. They have the same resources except for maybe a little more money at their disposal. They have the same fears. They do the same analysis. They just hold losers longer. So this is a testament, right? Honestly, it always hear the stuff about, I don't know, it's a pet peeve I have, I guess. People elevate institutional money that much more. I just don't think they that much. Maybe it's whatever. All right. Don't run our little world down. That's Retail Joe's. Okay. What I wanted to point out was this. Average daily range for the euro, all right, over the last 10 weeks has been 86 pips a day. If we take this out even further, okay, 88 pounds 76. This pound up until yesterday was going at like a 60 clip. All right. Guys, what is a normal daily range on the pound meant to be? Normal, right? Don't think back to 2008 of like 9 billion pips a day. Normal average daily range here should be like about $1.60 to about $1.80. Euro about 120 to about 135. Aussie dollar somewhere in the vicinity of Aussie dollar, somewhere in the vicinity of 100. This is normal. This is not normal. Why? Because it's weak versus weak. Alright? So anytime you're dealing with weak versus weak, market becomes a little more capricious, a little more fickle. And when you're dealing with very limited daily ranged pairs, just be careful trying to scalp around intraday. I really find it better to sort of pick a direction and stick with the bias. And maybe trade a little bit smaller, give things wider stops, and avoid a lot of the EKG in between what is real. 2-bit piece of advice here. Anyway, euro dollar. No question that the sort of 32 to 34 zone has been a big deal. Right? And we're running into this zone again. Now, ultimately, the euro is just a big fat range when you look at it, isn't it? It is. Little triangle range. Yes, this was a higher low with respect to this. Okay, I'm looking at a monthly chart now, so take that with a pinch of salt. Alright, we do have a little stochastic up and a higher low. So I'm expecting euro to nudge up here somewhere into the 32s. 32.5, overshoot to 33. That'll get half the universe thinking, this euro is exploding to the upside. I need to get on that bandwagon. Thanks, everybody. Okay, I need to remind you, the euro is not a great currency right now. So I'm absolutely expecting us to go and challenge these areas and then get its little head chopped off. And make a return back to 126, and we'll just kind of range around in there for some time. How do you feel about that? You know, and then we'll have to figure it out, right? Then we'll have to figure out where we're going fundamentally, where we're going technically. Are we going to make that move down to sort of 110 that I think a lot of people are expecting? I don't know. Alright, I simply don't know. The Fed's doing some crazy things. The ECB's doing some crazy things. But what I am anticipating is a higher high into about 32.5, 33, followed by a move down to 126, which is also what the euro yen was telling us, wasn't it? Does this make sense? Is this more or less what you guys are looking at? Pound Swissy. So, if anything, this would be our red zone, and this would kind of be the buy zone, I would think. We'll see how we do with that. Differences of opinion on this euro. Ready, go. The thing is, though, is that if you're going to trade any cross, you need to have some idea what's going on in the euro, in my opinion. If you're going to trade euro yen, you've got to have some clue on the euro dollar. If you're going to trade euro pound, same thing. If you're going to trade cable, the same thing. If you're going to trade euro Aussie, the same sort of thing. No differences of opinion, so we're all on board with that? Awesome. Right, we can have a very quick look at pound Swiss here. I think I've got about 2 minutes left. What specifically did you guys want to know on this pound Swiss? Thanks, Boyke. What's my bias? It's been a while since I've looked at this pair just because it's been tremendously congested. I've got to be honest, it looks rubbish. Looks kind of not so great. Not so awesome. It looks to me like we want to do a little something like this. Looks to me like we want to do a little something like this. There's no question that this has been a support zone, and it's going to want to penetrate down into this area, but this is, this whole area support, so you're probably going to want to do a little something like this. Why is this green zone? Well, it's the fib of this rise. You got previous swing highs, you got junk here, right? So you're going to want to run into that, which it looks like it could do on the short term, come all the way back to sort of a 50% of this drop, maybe fit 153, and then do this. Yeah, it's not great right now. It's just not great. Once again, it's weak versus weak. You've got Bank of England printing money as fast as they can. You've got the Swiss Central Bank talking about negative rates. So, well, the pound's interesting, right? Actually, cable, and I'll be quick. Now, this is just, this is my 2-bit opinion. Okay, everybody's got one, right? You know what they say about opinions. Okay. In my humble opinion, this is a weekly chart. We have made this double, and as long as we're living below this double top, I have pounding sort of something like this. I've been watching the fundamentals more lately, just trying to get a feel for things, but I trade 95.783% tech. If I think the euro is rubbish and it looks like it wants to go up, I'll still buy it. I had a little something like this going on in the pound, honestly. I don't think that we can fully rule out the dollar. Anyway, guys, so, always open to opinion, and I think that I got to preface this by saying that all plans are flexible, right? So, by all means plan stuff, but don't be so proud that you're not willing to change. Okay, so, if pound looks like it wants to go to 180, I'll jump on board the long. You got to trade with what information you have at hand and then adjust from there. So, if you see a forecast of somebody saying 110 on the euro, and then the next week they're saying 125, it's all right. Trade with the bias, but don't be so rigid that you're not willing to change with new information. Fair enough? Anyway, guys, so Twitter at ForexDavid, it's a good way to reach me, or david@fxbootcamp.com. Log in and say hi. Thanks, guys, and we will talk to you soon.